I don't know whether last year was so bad because there was just a mismatch between the price people wanted to pay and the ones that actually they wanted to sell. And does that get adjusted this year?
Well, last year the problem was interest rates were very high, and sellers were afraid that if they sold to somebody, they probably weren't going to get the price they wanted because buyers didn't want to pay the price because interest rates were high. And buyers were afraid that they were going to buy into a recession.
Yep.
They thought the recession might come. Right. They look stupid by buying something and it goes into recession. Now the recession fears are gone. Interest rates are coming down almost certainly very soon. So I think you'll see a lot more M&A activity and a lot more private equity activity.
Are you expecting 6 Fed cuts? I mean, that seems excessive.
I think trying to predict what the Fed's going to do precisely is a fool's errand. The Fed's going to do what it does based on the data. But right now, I think the markets will be shocked if the Fed didn't cut before the election. Now, the Fed will, I think, have political problems if they say we're going to do some cuts right around the time of the presidential election, because you can be sure Republicans would say you're just trying to help the Democrats. So they're going to get their cuts out of the way. They're going to meet in January, and then I suspect they're going to talk about what they're going to do in the March FOMC meeting. And I'd be very surprised if there isn't some cut by March.
Yeah, but in terms of deal making, I mean, would people not wait for the U.S. election to know who's in charge in the White House? Because that could change also regulation, rules, foreign policy, everything, really.
Well, there's no doubt that the current antitrust enforcement is not that favorable to a lot of bigger acquisitions. But private equity tends not to be doing things that the antitrust officials care about that much because they're kind of standalone acquisitions. So that's not been a big problem for people. It's really been the interest rates and the concern that there might be a recession coming. But I think that concern is gone.
We've seen some big deals in private equity, especially in infrastructure, with BlackRock buying GIP. We have Actis and General Atlantic. Is this going to continue? Are we going to see a lot more of these already big, sizable deals?
Well, the consolidation that's going on in private equity, I think, will continue. The BlackRock deal is a very good deal for BlackRock, I think, and a very good deal for the firm that sold it to them. It's a very good firm. GIP is an excellent firm. It's a high price, some people would say, but I think it will work out well for everybody. I think you'll see more consolidation, particularly in infrastructure, because infrastructure is an area that people like, relatively predictable rates of return, and there's a lot of interest among investors in investing in that class. But yeah, I do think you'll see more consolidation, and some of the bigger firms will get bigger.
But this is what with infrastructure, because infrastructure is really what we need if we're going to build this new future, or private equity in general?
Well, private equity in general, but infrastructure is a class where a lot of the big private equity firms don't have a gigantic infrastructure business, so they might want to add to it. Some do have businesses that are big already, but our infrastructure is a very predictable business. It's a very predictable rate of return business, and it's one of the ones that I think a lot of investors increasingly think is a good area to invest in. Remember, in the administration in the United States, the Biden administration has gotten a very big infrastructure bill through Congress, and a lot more infrastructure can be built in the United States, but that's true around the world.
David, do you worry about private equity, maybe some of the spaces that are smaller where they're in debts if actually interest rates don't go down quickly? Are some of the smaller companies in trouble, like real trouble?
Well, there's always a way you can get attention by saying things are in trouble, things are falling apart. But right now, despite the fact that interest rates were so high and the economy was not wonderful for a while post-COVID, I think now we've seen relatively few bankruptcies and relatively few distressed debt opportunities. I think you'll see a lot of distressed debt opportunities in real estate, because I think commercial real estate really hasn't seen the worst of probably the debt problem that's going to occur. But I think it's different in other parts of the private equity world.